Oh, same. Change it.
Welcome to Network Effects, Investing in Digital Finance. Now, let me give you 3 facts to start. Fact number 1, half of the world's population has a smartphone. Fact number 2, the global digital payments market is worth over $4 trillion, and that is expected to reach nearly $7 trillion by 2023. Fact number 3, inequality is growing for more than 70% of the global population. There is enormous potential for mobile phones and the internet, and actually even for feature phones, to bring people into the local and global economy and to decrease this inequality. But it isn't happening yet. So I am very pleased now to have for you 4 people who are democratizing cash transfer payments, investing. They work all over the world, Asia, Europe, Africa. They are investing in humanity. So let's explore their work and whether it can tackle this inequality. Please welcome CEO of Atari Chain and founder and CEO of Crypto Blockchain Industries, Fred Chesnais. Welcome.
Thank you. Good morning.
Good morning. And I would also like to welcome Chief Strategy Officer, board member of Blend Network, Roxana Mohammadian. I'm gonna massacre it. I was practicing it this morning. Roxana Mohammadian. Good enough?
Yes,
Molina.
perfect.
Founder and CEO of AIM, Jenna Lee. That was easier.
Yes.
And founder and group CEO of Paga, Tayo Oviosu.
Thanks, Edie. Good
Welcome.
To be here. Thank you.
So, Tayo, let's start with you.
Sure.
Paga is the PayPal of Africa. It may be Africa's next unicorn. I am reliably informed.
Inshallah.
In Nigeria, that smartphone number is less. Penetration of smartphones, only 12% of digital-only strategies don't work. So tell me how Paga is working.
Yeah, Edie, thank you very much for having me here. Really great to be back at FII and to see everybody in person again. So, in today's Africa, most people don't have smartphones. In Nigeria, where I'm from, 200 million people, smartphone penetration is only 12%. So when you're thinking about solving the problems of payments or financial services, you have to think both offline and online. And that is exactly what we've done at Paga, right? We've created a network of what we call agents. These are mom and pop shops, pharmacies and grocery stores in your neighborhood community that people trust. And people can go into those places and get services rendered to them. So they provide the on-ramps and the off-ramps into the digital platform that Paga is, right? And so those agents use the digital platform themselves. And then the consumers can also access our service on a feature phone. So just like making a phone call, it doesn't use any data. You dial *242# on any mobile network, and it pulls up a menu-driven system. Press 1 to send money, press 2 to request money, right? Press 3 to buy airtime, press 4 to pay your bills, right? You can just go through the menus and pay your bills, and you can do all your transactions on a feature phone. So in today's Africa, you have to think about both offline and online. Digital-only strategies on a smartphone doesn't quite work, right? And so that's what we've done, and we've seen this working. We now have over 18.6 million users on our platform. And through the COVID period, we've seen the acceleration of transactions, right? The first 8 years, we processed 2 trillion naira, which ended in March of last year. And then with COVID and the move to digital, in the next 15 months, another 1 trillion. And then the next 1 trillion is in 9 months, even shorter period. So we're seeing that this approach of having an offline-online really does reach the mass market and provides the ability to bring them into formal financial services, and that has huge potential.
So tell me a little about the inequality aspect and how you're seeing the digital payments, your ability to pay your bills via a feature phone, address specifically this issue around inequality.
Yeah, I mean, like if you look at Nigeria, so 61% of people are unbanked, don't have a formal access to financial services. They're saving in very inefficient ways. And so what all of these technologies do is it gives them a way to put their money in a secure place that is insured by the government insurance corporation. right? And that way they're actually able to better use their money, right? They're able to secure their savings and their livelihood. And then it's also helping them, earn more, right? So we're also bringing services to people, creating jobs, right? And so that is helping lift people out of poverty as well, right? So that's the potential that these kinds of services have as we scale across not just Nigeria, but the continent.
And they trust the phones.
They trust the people that they're using, and they trust the service.
So
right?
they trust the agents that they go in.
They trust the agent, they see that it works, and then they trust the brand and the service because they see it works, right? So it's less about the phone itself, right? But more that they know that this brand works, right? And that's what they've come to believe in because somebody else told them about it and they saw it working, and then they got to use it.
Interesting. Okay, let's move on for a moment to Fred. We'll stay in Africa for the moment. That's why I want to come to you. You wear two hats, but we're going to start with the CBI hat, the Crypto Blockchain Industries one. First of all, why do you see the future of payments in mobile money?
Well, I think the most important fact, and it really addresses the issue of inequality, is that if you want to open an account at a bank today, you will have to go through, properly a lot of, know your customer, KYC regulations, applications. And I believe that in many countries, it is very difficult for anyone to be able to go through and pass the test. So what we've seen, at least what I've experienced personally, is that you have a reduced, I would say, level or a reduced standard to get a phone and to get a mobile account. I don't start with the premise that everyone is trying to cheat taxes, is a terrorist. So I believe that there's a need if you have someone who doesn't have a home, who doesn't have an ID, but I believe that there's a need for that person to be able to access some form of financial instrument. Otherwise, that person will remain excluded, right, from the global economic system. So and that person especially, I do work in the DRC, Congo, in Kenya, Liberia, Guinea. It's not because the person doesn't have a home or is not able to justify that they are living here, that they should not have access to some form of payment, which is critical. You can't stay with a cash system. So that's where I see, the telephone business, the ability for everyone to open a mobile account as really key to reduce level of inequality, starting in Africa, which is quite funny because in Africa they started late, so they kind of leapfrogged everybody, and now you have as far as I can see, you have a level of technology integration, acceptance of the system, which is far better, far higher than in Europe or in the USA. The key for me is, back to what we were saying earlier, is that they trust the system. Why? Because the telco is telling them, give me one local currency, I guarantee you that when you want to exit, I'm going to give you the same one currency. Give me a Kenyan shilling. I'm going to give you a digital shilling, but if you want to exit, I'm going to give you back one, less a few fees that we'll accept. But that's, for me, that's key. They trust the telcos.
So how are you working in Africa?
So we do, my DNA is gaming. I've done that for a certain number of years. I believe, I start with, what I know the best, which is games on telephones. And we know that this is a nice way to capture a significant portion of the population, especially the youth. And as we know, in Africa, population is very, very young. So we start with what we know the best, and it's really games on telephones. It doesn't have to be smartphones. We also have games on, these old phones. You can play with USSD program, which is, call it like the old SMS. And that's fun because we are growing, and we're not only following the population, we're also trying to bring some new games. And we follow not only the population, but also the evolution of the network and the evolution of the install base. For the moment, it's difficult to work with feature phones. And even if you have, I think they have a lot of feature phones, but what's very expensive is, access to the internet. I think it's going to change in the next 2 to 3 years. And at the end of the day, I think what you're going to see is a much, much, much broader revolution, which is today you have, give or take a few, 4 billion people connected to the internet. And I think in the next 2, 3, maybe 5 years, I'm not saying it's going to double, but you're going to go from 4 to 6 billion. And this is where we're going to see a big revolution.
And what are you doing to reduce inequality?
Look, in Africa, for us, it's more difficult. It's more on the blockchain side, what we're doing, and I think we'll come back to that in a second. In terms of the traditional business, we have in Africa, as part of the regulations, we have to reinvest a portion of our profits in local initiatives. So we do support charity programs in Kenya, Miss Scotch, for instance, or a few charities as well in the DRC and in other countries. But as far as the traditional business goes, this is the extent of what we're doing, yes.
Okay, we'll come back to you in a minute. Roxana, let's come to you now. Now, Blend Network is a digital lending platform to property developers. So tell me a little bit about it now.
Thank you, Edie, and great to be back at FII this year. Over the past 3 days, we've heard a lot about, leaders and speakers about the challenges of today and the need to invest in humanity. And we've heard about the importance of investing for impact, for change, and the fact that we are at a juncture in time that is really is not enough to talk the talk. We really need to, get into action and walk the walk. And we've also heard about how technology is really a gateway for opportunities. And I think we cannot talk about opportunities without talking about digital finance. And I will talk more concretely about what we do and give you an example, but it's just really about, I see digital finance as connecting opportunities with choices. So my company, Blend Network, is a fintech company that operates a digital lending platform. So we are a non-bank lender, and we provide development finance debt to property developers, to SME property developers and small construction companies that are building sustainable, ESG compliance, affordable, and climate-friendly houses. So I think it's better explained in a really to tell you a story how it works and how we are trying to really support this sustainability. So the time is it was last year, 28th of April 2020, in the middle of the lockdown, the biggest lockdown that we've had. Most of us sitting at home and figuring out what to do next. I get an email from a small property developer in the UK called Richard, in his 50s, a lot of experience in property development, doing it since starting his career for over 30 years, very stressed. The reason very stressed is that him and his business partner, they are working on a project and they are about to exchange on this project to build 52 sustainable houses somewhere in Wales in the UK. And at the last minute, the lender, a high street, a well-known high street bank, pulls out of the deal. Obviously, we are in the middle of the lockdown and what we call, the lockdown on lending. So this happened a lot. A lot of banks, they decided to focus on existing customers and on essentially channeling, the government help to SMEs and to entrepreneurs. So property developers were not a priority, and many property developers, like this one who contacted us, they were left out in the cold. And the project was great. So we looked at the project. It was, a great project to build 52 sustainable houses, eco-friendly homes. A great exit on the project because we are short-term lenders, so we look at the exit. A great experience of the two business partners, and so we decided to lend on this loan. So we obviously have an in-house team that does the due diligence. We decide to lend on this loan. The loan goes on our platform, which is a peer-to-peer lending platform. So we have investors who are registered and they can see the deal. And the deal was funded by 95 investors in less than 2 hours. And I think this story is just, it gives you an example of how what I mentioned is about connecting opportunities with, choices. Choices for investors who were able to invest on this deal. They got access to a great financial return, but not only the financial return, the ability to contribute to a project, a very tangible result. They were helping a property developer build 52 sustainable homes. And the opportunity for the property developer to obviously unlock the funding that they needed to build the houses. So this is just a concrete example, I think, of nowadays how digital finance is helping connect opportunities and choices.
In the UK, there's a lot of focus on leveling up, which is the idea is we're trying to bring people who live outside of the southeast of London to a better life, better opportunities. So how does your platform help them do that?
So, we've all talked about, we all know about the need to build better, to build greener, to build more sustainable, but especially now after COVID, there's a lot of, pressure on government finances. And I think in the past, I have seen this change in mentality and this change in the narrative. Before, we all know that we need to change and we need to be more sustainable, but before it was about, well, that's the government's job. The government is here to do it, or the big organizations, the big banks, the big energy companies are here to do that, to do exactly that. But now it's about how can we all do it? It's about me, you, everyone in this room. And I think platforms like ours and like many others, they are allowing retail investors to contribute to this change, because I can put, $5,000, £4,000
What's the
into
minimum?
this. £1,000.
£1,000.
Yes, so I think this change in narrative is about not let them do the change and let them build greener, better, more sustainable. It's how can I contribute to this? Yeah. And going back to the agenda, the leveling up agenda, now this is an opportunity for everyone to be able to contribute to this, because more than ever before, the government finances are, under stress after COVID, and we can all contribute, and is an opportunity to be part of the solution effectively.
Interesting, thank you. So Jenna, let's come to you, and a very different market from the one that Tayo is operating in. 12% smartphone penetration. In Korea, 98% smartphone.
Other way around.
97% smartphone penetration. So how does AIM work, and what are you doing?
So I come from a quantitative hedge fund background where I served premier institutions with minimum account size of $250 million. So just to get started, you need that money to get your separately managed accounts. So even I wasn't able to get into our funds as I was a manager. So looking at this problem for Henrys, high earnings, not rich yet. You see so many
love
Henrys.
that. High earnings, not rich yet. Henrys, okay.
We're helping Henrys to build their wealth and have safety net using a mobile app. So think of AIM, automated investment management, as an algorithm-based hedge fund manager in your mobile phone. We only charge 1% fee upfront, nothing more. We're about, we have 1 million users in Korea, manage about $750 million now.
What's the minimum?
Its minimum is $3,000. It used to be $5,000. We're lowering it to get to the longer tail market. But it's been a challenge because of the infrastructure. In the US, you could easily get into fractional shares. In Korea, it wasn't existent. So I was going to talk about how the infrastructure has to be laid out for innovators to work on top of it. In some of these markets, you have to work with what you have, and sometimes you have to build everything yourself. So of the 6-7 years that I put myself into AIM, about 2-3 years were spent on working with existing broker infrastructure. Getting the accounts or opening the accounts was hard for our clients. Once that product market fit was done, we were able to grow the company from like 200 million, 10, it was amazing how we grew from 10 million to 100 million, 500 million, 750 million. But with that came regulators, competition, fierce competition. But what gets me going is serving this client. We really respect what they're doing in their lives. They're hardworking, smart people who want to have a better life. And there's that disparity between the highly developed world versus the emerging wealthy nations in Asia. And we'd like to bridge that gap of access, information, and largely education about the financial markets.
So how does it work? Tell me, I open the app on the phone, I'm a Henry. What happens then? I've got $3,000 in there, then what happens?
So we give you some survey, we do some back of the server analysis on what your true risk tolerance is. We don't just believe you.
Right.
So you might end up getting a not so aggressive portfolio if you're spending a lot compared to your peer group that's earning as much money. We say aimers tend to aim for higher or better future versus aiming for present. So that risk appetite is assessed differently in our system. And there's the alpha generation component. We do use ETFs, New York Stock Exchange traded ETFs, all dollar-based. We focus on giving you a strategy that diversifies your portfolio, meaning it's a global strategy ex your country. So in Korea, people are getting global ex-Korean strategy, which diversifies your portfolio to 77 countries and 12,400 underlying assets. What you do on our app is just put in a bunch of your preferences and get advice. And once you get the portfolio asset allocation, just like the institutional guys, you click on the button. It will tell you how many shares you would get, at what price. It's all projected. And we aim to give you a residual. When executions are not done for the day, we'll give you residual advisory the next day. So orders are good for the day. In a way, you're getting the advice, very intelligent advice, and an ability to trade on your mobile app, same app. With that, we're really happy that we're adding to your, we're value adding to your life.
Do you have any data on how you are increasing or decreasing this inequality or making these people's lives better?
So yeah, we started out with that $5,000 hurdle, and we lowered it to $3,000. And what we're seeing is there's a much more higher penetration into the female investors who used to be more conservative. I think they used to save more than going into financial products. I think the investment world has been very much bipolar. If you're a safe haven seeking investor, you'd go into real estate in Korea because there's a downside protection. You can sit on it. Meanwhile, if you're aggressive, you'd go Robinhood, you'd buy Amazon.
Right.
So that's what they're doing. We're just building that middle ground. We are actually, 20, so we used to be 20% female versus 80% male client base. Now it's evening out a little bit, so 35 to 65. That means a lot. It's like 100% more penetration into what people who have been left out. Also, there's millennial, I think millennial pain. Millennials are getting into Bitcoin, crypto, to get higher returns quickly. They feel they are missing out. They have missed out on the last generation's growth. So, do they always have to have a speculative asset class predominant in their portfolio, or can we provide some alternatives as a safe haven? So that's also, what I have such passion for. And
Fantastic.
yeah.
Thank you. Let's stay on the gender point. So, tell me about the number of women using your platform, either as users or agents.
Yeah, so in terms of users, we don't have the exact numbers for all the user base, but I would say for the agents, about 35% of our storekeepers are women.
These are like 7-Elevens or...
Yeah, it's like a typical 7-Eleven neighborhood store where you go in and buy bread and provisions, things like that. And some of our top agents are women as well. And so it's been really good seeing the impact on them and also the jobs they're creating, right?
Give me an example.
As well. So a typical storekeeper has at least two tellers, two people they hire just for the Paga business, right? And in Nigeria, the statistic is that
Just for the Paga business?
Just for the Paga business, right?
Wow.
Yeah. And in Nigeria, the statistic is that for every one person employed, 4 adults are depending on them. So it's a multiplier effect in terms of the impact we're having, right? Over 60,000 agent points, everyone hiring, 2 people, right? It just multiplies in terms of that. By the way, I think this conversation here is a real interesting view of the world, right? We have, where I am, where we're trying to just solve payments and access to savings and loans, just basic financial services to investing in real estate,
Yeah.
right? And making that accessible to the middle class and for people to also level up and then to investing, you know, in stocks and just like listening to you guys and I'm like, wow, this is the roadmap we have to go in Africa.
Right.
That's what's ahead of us. right?
Interesting.
Yeah.
So, Roxana, just tell me about the gender aspect of your investors as well.
Yes, I mean, the gender investment gap is something that I'm personally very passionate about. We all know the statistics. Women have cash, but they don't invest. And this is, you know, is not just a statement, there are statistics around it. There was a survey saying that 1 in 2 women, they've never held an investment account, they've never invested. There was another really interesting one that said, you know, 61% of women would rather talk about their own death than money. So we are
Their
really
own death
yes,
than money.
than money.
Crikey.
So women don't like to invest and talk about money, and you know, so we are very passionate about the gender investment gap, and over 50% of our lenders on the projects are women. We do a lot of work around this, but I think there are also several reasons. When one researches into why women don't invest, you often find that the language that are used by many investment providers it doesn't tend to be a very female-focused language because women are driven by a different set of, you know, motivations when investing. Obviously, the financial return is a factor. We all want to make money and get a good return, but there are more. There's more into it. For example, the impact of the investment that you are doing. So when in platforms like ours, when the investor is able to pick and choose the projects that they want to invest in, see that exactly, you know, the property developer is going to build 30 houses in such and such street, you know, you can go and see it, you are making this impact. I think this is a theme that tends to be appealing to women and is something that is, you know, easy to understand. You see the impact that you are making. So I think this is one factor that...
Do you think financial education, do you see financial education as part of what you're doing?
We are very open and vocal about the need for women to invest, and definitely I think you know the transparency and yes, we are very open in talking about this topic. So I think financial education is a big part of it, and for us it's very important to be able to open these platforms to more and more female investors. But also on the other side, by the way, on the borrower side, we have quite a lot of female property developers, which you might think there are not many, but we do have a lot of female property developers.
I know quite a few.
And I must say that, you know, we actually really like the profile of the female property developers because in terms of the risk, you know, sometimes they tend to be a lot more kind of sensible, and, you know, the topic idea that you think, you know, a man will come to you and say, how much do you want to borrow? Well, as much as I can. And the woman, you know, will have their numbers and kind of really, you know, a bit more sensitive on their numbers. So we like the more conservative profile of the borrower that is a female property developer. That's the other side of the coin.
Thanks. Does gender matter on the blockchain, Fred?
Well, not really. Our activities are more, and we are kind of gender agnostic, so to say. The goal for us is more to bring more people into the system, to have more access for people who are currently excluded from the system and bring them on the blockchain into the metaverse. You know, metaverse is a word that has been pronounced many times during the last few days. And I think it's very important to understand what it really means and where the difference is, right?
What does it mean for you, the metaverse?
I mean, the most important thing is to compare it to the current world that exists, you know, because virtual worlds, I mean, this is not new. I've done online worlds for not 20 years, but at least 15 years, as far as I remember. So a virtual world is not new, okay? The real difference today is the word blockchain. It's because it's on the blockchain that this is so different, and that this is the reason why this is going to change. Let me just explain, and maybe I could spend hours on that, but in 30 seconds. Virtual worlds today, if you want to go play, interact, you need to have a bank account, you need to have a card, a credit card. Your money goes from your bank account to the operator, to Apple, Google, and then to the publisher. And whatever you do in this world, you cannot transfer it transpose it into another video game or another virtual world. Each of them, these are silos, and to access these worlds, just like if you want to make a transaction on the internet, you need a credit card. Back to KYC, AML. If you don't have a bank account, you're excluded. The metaverse is on the blockchain, meaning anyone can create a wallet. Today it's going to take, what, 5 minutes, 3 minutes? If you manage to buy some cryptocurrency, you can earn it on the internet. You don't need a bank account to earn this crypto. Then you can go into the metaverse. And what's going to happen is completely different for 2 reasons. One, you will do a transaction not with the game operator, but with somebody else. And you're going to do that transaction on the blockchain with cryptocurrencies. There's not going to be any bank in the middle. It's going to be from your wallet to another wallet. No bank, no one is going to interfere. That's the revolution. There's a big, big difference. The second big difference is in a video game, a virtual world today, what you do in that game stays if what you do in that virtual world stays there. You can't take it out. You're kind of prisoner in that virtual world. Because you're on the metaverse, and this is where the notion of blockchain plays a very, very significant role, and what we call interoperability is that what you do with NFTs, non-fungible tokens, you can take them out and you can use them, assuming there's interoperability, you can use them in another metaverse. So whatever you do here, you grind, you do, you create, you sell, you earn something, so you can take it out.
So you might earn a fancy one-off car or a beautiful outfit that you're putting on your avatar. How do you take that out of that gaming world?
Because it's yours, it's in your wallet. So you can just, you say, thank you very much, I'm going to go to the other guys, assuming there is interoperability, you'll be able to sell it on a marketplace. These are the 2 main differences. Everyone is talking about, metaverses, but this is because of the blockchain. If blockchain wasn't there, we would still be with the same virtual worlds and there would not be any difference. Now you can go, you have the tools, it's peer-to-peer transaction. On the blockchain, no one can control it. No one controls the metaverse. That's the whole point. No one controls Bitcoin today. That's the whole point of Bitcoin. Some may say this is the nightmare, some may say this is the dream. My point is, I'm just stating the fact. No one controls Bitcoin. You can't stop Bitcoin unless you you turn off the internet. That's fine. You can't change the code unless everyone on the Bitcoin network decides at the same time to change and increase that $21 million barrier at the same time on each and every computer. So no one controls it. Again, I'm not saying it's a dream or a nightmare. I'm just saying it's a fact. And this is why the metaverses are so important. It's not because it's a virtual world. I've done zombie games, survival games 15 years ago. They're still rolling, they're still paying royalties. But they were not on the blockchain. The whole point is the blockchain and the crypto and the fact that you can go, it's peer-to-peer transactions, we're giving you the tools. That's the big revolution. And anyone can access.
So, Ty, are you using blockchain and how are you approaching crypto?
Yeah, we're currently not using blockchain, but we're big believers in the blockchain technology, and also big believers in a cashless world. So at Paga, we are going to go to cryptocurrency.
You are going to?
We are going to. Currently, the Nigerian government does not allow for financial services companies to do cryptocurrencies outside of the Nigerian digital naira. So we'll start with the digital naira in Nigeria, but outside of Nigeria, we will go towards cryptocurrency next year.
And tell me why, because what role does cryptocurrency play in Africa?
Yeah, Nigeria is actually, by transaction value, the second largest of Bitcoin traded, right? And it's really
second
interesting.
largest Bitcoin trade.
Bitcoin traded, yeah.
And why is that?
And the big reason is a lot of it is people trying to move money in and out of Nigeria.
So remittances.
For remittances,
yeah.
And that's because there are a lot of FX controls that make it a bit harder to move money into Nigeria. Earlier this year, the Nigerian Central Bank came out with a rule that all FX into Nigeria must land in US dollars, either into domiciliary account in Nigeria or given in US dollars in cash. And that actually, crashed a lot of remittance through the formal channels. So a lot of people are using cryptocurrency now and working with over-the-counter traders, individuals, to bring money in and out of Nigeria. And so I think the my hope is that the central bank will change this position. And we've had
Are you
plenty of
working with
debates.
them to do that?
We've had plenty of debates and discussions about it. I think they will eventually, right? Because I don't think it's that they're against cryptocurrency. I think, like any government, they want to have control of the monetary policy. They want to have control of the financial rails and of remittances. And I think they're also worried about money laundering and things like that. So they're legitimate concerns and protecting consumers, but those concerns can be addressed, right? And my view is that countries will have their own digital currency. I'm on the advisory board for the US digital dollar. And countries have their own digital currencies, but cryptocurrencies are here to stay. So I agree with Fred. Bitcoin's not going anywhere. Ethereum's not going anywhere. And anybody can go create their own coin. If people want to use it, they'll use it. So I think currently it's seen as an asset class for people for value creation, but over time it's going to be used for trading, for people into day-to-day lives, and that's our vision. And we think that that can really help, especially in Africa, right? For people to actually, look, the person who's making 100,000 naira in Nigeria in a month, who hasn't had a salary raise over a year, that 100,000 has devalued by 16%, inflation 16% in Nigeria. So, and then the FX
Same
rate.
in parts of Latin America
The FX
as well,
rate,
right?
maybe worse in Argentina, from what I hear. But the FX rate has also devalued significantly, even higher than inflation, right? So, cryptocurrency has value for people, and I think governments need to sort of, think about that and accept it like the U.S. and other places are starting to accept it, because it's the future, right?
Does it matter that the Chinese have banned cryptocurrency?
It does, and it's a really unfortunate decision. I do hope the Chinese government changes that, because they can play a real strong leadership role on this stuff. Because they, in terms of countries having their own digital currency, the digital RMB has been out now, tested I think in like 3 or 4 cities, and it's going to be spread across China very soon. So I'm hoping that they will turn around on that decision, because by a big country, big powerhouse like that making that kind of a decision gives credence. If I'm talking to the Nigerian central bank, well, what about China? So I hope China comes around, and I was glad to see the U.S. government immediately come out and say that we're not following that step.
Jenna, how do you look at cryptocurrency, and does the blockchain help you at all?
Yes. Two things. When we advise clients about investing in cryptocurrencies, I have said that I see it as an alternative asset class. There's a distinction between gold or treasuries versus crypto. But as you construct your portfolio, you have to be absolutely certain you're going in for a certain portion of your portfolio into traditional asset classes with very much studied risk-return characteristics versus what we're studying now as we're making history together into a new class of asset. So that's my advice from an advisor perspective. But as an entrepreneur, I have much more hopeful ideas about how to transform our legacy infrastructure that we built on top of to get AIM going. But once you reach a scale, we're about to cross 1 billion AUM. Once that's done, I think we'd like to be ready to start using wallets to cross borders, serve much more, wider, audience, more aimers, using our platform.
Finding Henrys around the world.
Yeah, absolutely. So, using wallets. Also, we're doing US dollar-based investing. There's huge benefits to that for especially emerging markets or local currencies that are very volatile. So can you replace that USD component with USDT, for instance, or can you come up with some other stablecoin structure that's more trusted? These are infrastructural innovation that we would love to get involved with our scale. And once that's done, our ultimate goal is to think about asset-backed tokens, or even TRS, total return swaps.
What are those?
So it's, in essence, people just want returns on their money. It doesn't have to be you opening an account, sending your local currency, and converting that currency, and sending it to your overseas broker to execute on the NICE exchange and get that custodian back rolling into your local country to book it. Can you all bypass that by saying, hey, there's this coin or AIM coin that is backed by underlying stocks, call it a new class of ETF. It's just a vehicle storing value. Instead of moving coins into ETF format, can you do the opposite? Can you make that happen? And you become the next BlackRock.
Great, that's a good ambition. Tell me about a challenge you're having at the moment around regulation, and what's that making you do?
So I came back to Korea knowing that there's a lot of deregulation happening. We were having our form of PayPal or Venmo in Korea popping up in 2015. I saw these changes happening, and we wanted to be ready for that change to happen, to progress into pure tech, into more fin domain, which is wealth management that we focus on. What I hadn't realized as much was the pace of innovation or pace of deregulation would be much slower. But another aspect is once you realize what you're trying to do becomes all of a sudden illegal, how do you revamp your model? How do you remodel your components in your business?
Why was it illegal?
So it's interesting, right? So the robo-advisory industry in the States gave a lot of inspirations to digital advisors in Asia, where I think the difference in Asia is most of the newly developed countries have a very tight government control or guidance, where you have just 10 banks in Korea that's operating, like major banks. There's only 4, big consumer banks that generate $4 billion revenue or net profit every year, net $4 billion. So heavily concentrated, and it's essentially oligopoly. Works very much in tandem with the government intentions, mostly good intentions, right? So having a tight control by the government, you have to, I think you have to be very savvy about what your innovation is construed as by the incumbents. If they see it as threat, they'll do a very smart regulation. I think they would come up with some stipulate, very small stipulate, in terms of getting a client on board, and say, hey, because this law says, or this stipulate says, investment document has to be handed in person.
Right.
This little thing will deter you from getting everything online.
Right.
Just one little procedure that's going to make everything collapse. So when that happened, we said, we got a lot of calls from brokers who wanted to collaborate with us and make it offline, right? Saying, oh, Jenna, we want to work with you, you're doing great things, but did you know you couldn't do that yourself?
You need a partner.
Yes. And it's that very broker who went to the government and asked for the interpretation of the law.
Wow.
And that happened 2 months after we launched. So with that, we had to reconfigure our business processes we're not all automated.
Right.
It looks like online advisory is legal. So we're going to do that. And as far as execution comes, it's going to be an explicit approval by the client. It's not all automated and discretionary. So that had to be done. So product market fit, or getting that product out, took us 2 years.
Wow.
Just reconfiguring everything. And once that was done, and once we are building great performance, getting the word of mouth out, this is the commercialization stage, right? Product building and commercialization. When the latter was taking off, we were very successful in educating people on YouTube. So I have my channel, Ask Jenna, with 300,000 followers. It grew, but we had to stop.
Right.
In the end, what happened was, me explaining ETFs, just ETFs, pure concept, was interpret it as unregulated advertisement of financial products or financial services. So I'm being heavily fined at the moment for each of those lists. My speech is fined at $10,000.
Crumbs.
So
Okay.
I got the bill of, I'd
Wow.
say, yeah, $1 million fine for explaining things. And they're going to lower it eventually. It's come down to, I think, $300K at this point.
Right.
So that happened.
Okay.
So we were going to talk about Squid Game, right?
That's right. So it sounds like it's the Squid Game of financial services.
Fierce, right?
Fierce,
Competition.
brutal, and ends in tears.
Wow.
Let's pause there. I want to know if any of you have a cautionary tale, a Squid Game tale of regulation, or something that you'd like to bring up, Fred.
Yes and no. I think at the end of the day, back to the theme of this meeting, investing in digital finance. I see think about three big trucks, right? You have the regulators, the banks, and the consumers. The consumers, it's super easy. When it's not possible because of the regulators, they are going to tell you why I should be able to do it. And when it's possible, they just don't want, or they no longer want to pay the fees of the banks. So we have a big truck, the masses coming. The truck from the regulators, they are trying to control this rightly because, of course, there needs to be some control, some form of system, especially talking about international transfers. And then you have the banks in the middle, the traditional banks. And what I'm seeing, this is why, as far as I'm concerned, I am investing in digital finance, is the only thing I can see for sure happening is the squeeze of the margins of the banks. Why do I have to pay to send someone from Europe to Africa a certain percentage? Why does it take 36 hours to do it? I think I understand it, but the masses, the consumers, they don't want to understand that. So that's why I'm investing in digital finance.
Right.
Because of all these three big trucks, at the end of the day, I think there's going to be the one from the banks that is going to have some very hard time just keeping their margin, keeping the businesses, especially when you have cryptos, blockchain, transfers with cryptocurrencies in 1 second from one place to another. It's going to be difficult. And I think the regulators will stay, of course. And at the end of the day, you're going to have two big trucks.
Yeah.
And this is why digital finance is super important.
I think regulators overall get a bad rap.
Right.
They're trying to protect consumers. They're trying to set the right regulatory policies and monetary policies. And yet technology is moving so fast. So they also have to play catch up to understand the new technologies. So I tend to have a bit more empathy for that, there's just a lot of learning that we have to help them with and get them there fast enough because the consumers are not waiting, right?
Is that possible? Can you give me an example of how you've done it?
Well, I've seen, for example, Pierre Omidyar, the founder of eBay. He's one of his fintech fund is one of my investors, Flourish. And what they've done is they bring together regulators from all over the world together to a gathering to tell them and help teach them about the upcoming fintech technologies. I've seen them do it twice. I attended one of it. And I think that's a great idea. And I think more people need to do that. To say it's not about lobbying you about anything. It's just here's the new technology. Here's where the world's going, right? And I've seen it with Nigerian Central Bank, inviting us and other players in the industry to come and speak on new technologies. I was asked to come speak on cryptocurrency at the payments retreat of the central bank in September, right? So I think they're all trying to figure out this new landscape of where the world is going, but they see the potential of digital finance and of how it can help lift people out of poverty and how it's the future, right? I think they generally do.
Roxana, have you come up against any issues regarding regulation, and how do you work with the regulators?
So in our industry, the peer-to-peer market in the UK is actually the second biggest market in the world after the US, except China. And I think that the reason for that is really the regulation, because the FCA has really tightly regulated this industry and ultimately created trust. So I think that regulation is key to create trust, especially when you are dealing with retail, customers that we don't have that many retail customers, but still is a key part. I think having a good regulation and especially clarity and predictability of the landscape, I think this is the most important. So in terms of challenges, no, I mean, obviously, it's good to have more rather than less regulation, and we understand that, and this is the environment that we operate, and I think that this is good for the entire industry. So yeah.
Perfect. Thank you. Well, that's a good place to end for us. Cryptocurrency, investing, mobile money, payments, blockchain, they will all be the infrastructure of the future, and we hope that they can also help us build this inclusive future, and that's what we've managed to explore today. We hope that it won't be a repeat of some of the early promises of the internet, which failed to live up to what we hoped. Maybe it's up to all of us to decide where this goes. So thank you so much to Fred, to Jenna, to Roxana, to Tayo for joining me here today. Thank you.
Thank you.
Thank you.
Yeah, great.